Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify, or wherever you listen. It's Thursday, the 3rd of April here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Trump tariffs everyone. The US imposes steep levies on all imports, ranging from 10 to 50%.
Countries around the world prepare their responses to US levies that are upending a global trading system.
Plus, fear grips markets as tariffs raise risks to global growth in a worst-case scenario for Wall Street.
Let's start with a roundup of our top stories.
President Donald Trump has imposed the steepest US tariffs on trading partners in more than 100 years. The minimum levy will be 10%, with the UK, Brazil, Turkey and many others in that group. The EU is being hit with a 20% levy, while Japan faces 24%. Meanwhile, China is facing a tariff rate of 34% on top of current charges. Bloomberg Economics says this means Chinese goods heading to the US will now face an average tariff rate of 67%. President Trump underlined the scale of the changes as he announced the plan.
This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense.
President Trump has embraced tariffs as a tool to assert US power, revive American manufacturing and exact geopolitical concessions from trading partners. The measures announced on Wednesday are based on the administration's assessment of all kinds of barriers and levies that other countries impose on American goods. The 10% baseline tariff comes into force from Saturday, while the higher duties will kick in from next Wednesday.
Trump and his trade advisors argue the tariffs will encourage companies to shift manufacturing operations to the US, rebuild the country's industrial base and create jobs. Using Federal Reserve calculations, these measures are expected to shave 2.3% off American GDP. Bloomberg Economics calculates that the effective tax rate that the US now charges on trillions of dollars of imported goods may climb to around 23%, higher than at any point in more than a century. Diane Swonk, chief economist at KPMG, says the announcement is basically the worst case scenario for Americans.
These tariffs are across the board. They're going to touch everything from going to the grocery store to going out to restaurants to even having to go to places like the movie theater and trying to have a little time off, because everywhere you go, there's some aspect that they have to import to do that.
Diane Swonk says that the tariffs now raise the likelihood of an economic slowdown in the US. Following the announcement, investors added to bets for at least 3 Fed rate cuts this year. But for Fed officials still working to rein in the price gains that spiked during the pandemic, the inflationary fallout from the president's actions may limit their ability to step in and bolster the economy with cuts.
Bloomberg Economics says the impact of the accumulated US tariffs on China would be enough to wipe out most US-China trade by the end of this decade. China's Commerce Ministry condemned the US levies but did not specify what measures it might use against them. Goldman Sachs China portfolio strategist Si Fu says the scale of the move is more than what many investors had priced in.
Definitely today's news, I would say it would be a surprise to most of the investors. It's out of expectation. Definitely in the near term, it causes more volatility, especially in terms of sentimental valuation impact. It's unavoidable, especially when U.S. market, global markets are all correcting. Then definitely for China, we are expecting more volatility.
Goldman's Si Fu speaking there. Earlier this week, Bloomberg reported that China had taken steps to restrict local companies from investing in the United States in a move that could give Beijing more leverage for potential trade negotiations with the Trump administration. The US president has yet to speak with his Chinese counterpart more than 2 months after his inauguration.
The European Union says that it is ready to retaliate against the 20% tariffs on the bloc. EU trade ministers are due to meet on Monday to discuss a response that could further strain the world's largest bilateral trading relationship. European Commission President Ursula von der Leyen warned that US actions would deal a blow to the global economy, and she urged further trade negotiations.
We have always been ready to negotiate with the United States to remove the remaining barriers to transatlantic trade. At the same time, we are prepared to respond. We are already finalizing the first package of countermeasures in response to tariffs on steel. And we're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail.
Ursula von der Leyen speaking earlier in Europe. The American measures threaten to wipe out much of the euro area's expansion that the European Central Bank forecasts for this year and for next year. The impact on inflation is less clear-cut, which has kept ECB officials from committing to any outcome at their next policy meeting on the 17th of April.
The UK government says it will continue to push for a trade deal with the US as it faces tariffs of 10%, less than its European neighbours. The Business and Trade Secretary Jonathan Reynolds said the government would remain calm, while acknowledging the UK would still suffer from the tariffs on vehicle and auto parts, steel and aluminium. The UK's approach has been backed by business. The manufacturing lobby Make UK said in a statement that this isn't the time for a trade war. Well, Siobhan Haviland, the Director General of the British Chambers of Commerce, commended the government's cool head, but underlined the havoc the US decision will wreak on businesses around the world.
Donald Trump's historic action risks inducing a worldwide trade war marked by tit-for-tat strikes that destabilise supply chains and hurt US exporters. Speaking after the president's announcement, his Treasury Secretary Scott Bessent urged other countries not to fight back.
I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number. And I think the market could have certainty that this is the number barring retaliation.
Scott Bessent went on to leave the door open for negotiations, telling Bloomberg, "We'll see." With regards to further talks, countries have already reached out to Washington to engage in discussions, but the Treasury chief indicated the administration would let things settle first.
Global financial markets are being hit by a sweeping sell-off after President Trump's bid to remake the World Trading Order proved more aggressive than expected. US and European equity index futures are falling along with the dollar, while Asian shares have tumbled, with an index in Japan sinking to the lowest level in 8 months. 10-year Treasury yields have slumped to the lowest level in more than 5 months, with the flight to havens including strengthening the Japanese yen and gold, which touched another record high. Kyle Rada is senior market analyst at Capital.com.
The absolute level of tariffs is higher than expected. The markets are going to have to price in this growth shock now. And there's still high degrees of ambiguity about what the sort of long-term objective here is for the Trump administration. I mean, is this supposed to be a radical restructuring and shaking up of the global trade order and the global economy? We've seen some indications that maybe they're willing to negotiate with trading partners on certain tariffs. That leaves some wriggle room. On top of that, though, it sort of opens questions about, the reciprocal tariffs in the United States and whether tariffs can actually be raised from here as, this sort of tit-for-tat dynamic plays out.
Kyle Rada speaking there as traders across asset classes are bracing for what promises to be a gruelling stretch of trade negotiations as companies and consumers adjust to Trump's tariff offensive.
Those are our top stories this morning. On the markets, the MSCI Asia Pacific Index has slumped as much as 1.7%, currently down 1.5%, the lowest level since February. Eurostoxx 50 futures are down 1.8%. The S&P 500 E-mini futures down 2.7%. The Nasdaq even more, 3.2%. Individual names moving after markets. Apple slumping 7%. Nvidia down more than 5%. The 10-year US Treasury yield this morning currently trading at 4.05, a decline of 7.5 basis points for that benchmark yield. To those are the markets.
Now, we have everything you need to know about the US tariff announcement today, what Donald Trump has said he will do, how other countries are responding and what markets are doing. It is a day of superlatives. If you want an example of how countries around the world are scrambling to this, Ursula von der Leyen stood up at 5:15 a.m. in Brussels and gave her statement to reporters in 3 languages, as she does on occasions like this as well, saying, of course, the EU is preparing countermeasures, but also had harsh words for the announcements from Donald Trump, talking about there seems to be no order in this disorder, no clear path through the complexity and chaos that's being created.
Yeah, the Chinese have called it unilateral bullying. And Bloomberg opinion columnist Lionel Laurent writing about this from the perspective of boardrooms, that they can't wish away a hostile and unpredictable environment that mixes mercantilism and MAGA, that European executives are now sort of questioning whether or not they can work with US firms given the current climate. So lots to think about today.
Indeed, and John Authers, also from Bloomberg Opinion, chose to quote John McEnroe, the tennis player, as "you cannot be serious" with these announcements as well. Full coverage across Bloomberg platforms, of course, and on our website you'll find our tariff tracker where you can navigate every Trump tariff and its economic effect.
Now, President Trump's sweeping tariffs have shaken markets, threatening to upend the world economy, reignite inflation and stall growth in the United States. Joining us now to discuss this is Bloomberg's trade czar, Brendan Murray. Good morning, Brendan. The tariff announcement seems to be worse than the worst case scenario. Can you just talk us through the announcement and what you make of it?
Yeah, it was quite a spectacle in the Rose Garden yesterday. President Trump spent at least 45 minutes or an hour speaking, some scripted, some not scripted. There was a bit of a MAGA rally sort of a vibe about the whole thing. There was a group of 20 or so U.S. automakers who were there, and almost his full cabinet was there. Vice President Vance was there. And as he spoke, the world came to grips with the fact that this wasn't just going to be a flat rate on across the board. It was going to be many different tariff rate numbers depending on which country we're talking about. China's imports into the U.S. face a 54% tariff, whereas 2 months ago, that number was 0. So we have gone from, 0 to 60 kilometers an hour in terms of the effect on the global economy. So, yeah, it was interesting to watch the market reaction as Trump spoke. All the market knew was the 10% baseline rate, and then eventually, once it absorbed all the other numbers, the much higher numbers, stocks turned down. So, the sentiment really kind of whipsawed there in the aftermath of it.
We heard from the US Treasury Secretary Scott Bessent. He spoke to Bloomberg shortly after the announcement, warning against retaliation, but already we're seeing other countries ramping up their response to this as well. Talk us through some of the responses we've heard.
One of the few areas to avoid a big hit was Canada and Mexico. Canada, they already have they're under another sort of tariff regime, so they did not get hit with these reciprocal tariffs, and so you would think that there would be room for negotiation there. And Doug Ford, a Canadian politician, said he would urge the Prime Minister not to retaliate. So maybe there's some room for negotiation there. We heard a similar kind of tone from Japan, who said this was regrettable, but we look forward to sitting down with the Trump administration and working through this. The European Union, as you mentioned, was out very early this morning saying we have a big response if talks fail. So they are leaving the door open. Never has there been a better telegraphed beginning of a trade war than April 2nd, 2025. So the EU could have come back immediately with a package of retaliation, but they came in this morning and they said we'll give talks a chance. So those are the three between Asia, North America, and Europe. There seems to be a tone of, okay, let's sit down. This is the worst case scenario, but let's try to talk through it.
Yeah, and we're getting fresh lines from Japan, from Ishiba, saying that Japan won't hesitate to talk directly with Trump if necessary, deeply concerned over the consistency of US tariffs with the WTO. The World Trade Organization will strongly urge the US to review tariff measures. President Trump is following through, though, as you say, long telegraphed, long promised campaign to reshape global trade. So a question domestically in the US, will it help the US in the long run?
What matters in politics is not the long run, in the short run. So when you look at the countries that got hit, you're talking about the hardest. You're talking about Vietnam, Malaysia, places where Apple, an iconic American company, has shifted its production. So everyone who wants to buy an Apple iPhone going forward is going to pay whatever that tariff rate now is on Vietnam. It's in that high 40%. I think it's very high. So during the first trade war, a lot of Chinese companies moved to these places in South Asia to avoid the tariffs. And now the second Trump administration is catching up with them. And try to sort of block that end run around tariffs that they were trying to do. So you got to wonder what the effect is going to be in the short term on the economy. And on, as we heard some previous guests say, this doesn't clear up the uncertainty cloud that's been hanging over markets and companies for the past couple of months. In some cases, it makes it even worse.
Our trade czar, Brendan Murray, thank you very much.
Well, the tariffs have sparked a sweeping sell-off across global financial markets. Traders are now preparing for negotiations against an economic backdrop that has already shown signs of softening. Joining us now is Bloomberg opinion columnist Daniel Moss. Daniel, welcome to the programme. You've reported on many major market moments for Bloomberg, of course. How significant is what we're seeing today in markets?
Well, it's very significant. As Brendan just said, there's a big performative aspect to this. I think President Trump at one point said this was possibly the most important day in modern American history. Well, okay, it's got a few rivals there. Look, I think the temptation on days like this, particularly when, as Brendan said, there's been such a big countdown, is to do the before times, after times. This is the fundamental break. But I think we have to see, where some of the pieces settle here. It's still early days. Believe it or not, we're less than 3 months into this administration. So on January 19, the economy that Trump inherited the next day from Joe Biden, by January 19, the US economy was doing very, very well. Certainly far better than expected. This didn't attract much attention at the time, but on the last working day before Trump's inauguration, the IMF released some updated numbers to its World Economic Outlook. The big story there was not so much the numbers, according to the fund's chief economist. The big story was the way the US had broken away from the rest of the pack. Its performance was head and shoulders above its peers. So in a way, the US is kind of counting on, well, you want access to the market here. You want access to the world's largest economy. People are no longer oohing and ahhing about, how rapidly China's growing. You want access to the US, you've got to pay. Late last month, there was a very interesting interview that our Bloomberg News colleague, Saleha Mohsen, did with Steve Mirren, chair of the White House Council of Economic Advisors. He said this, quote, "Countries that sell to the United States are inflexible. They've only got the United States to sell to." In other words, you want to come here? Well, okay, now you have to pay up. And, there is an element of bullying about this. Scott Bessent was saying, well, we strongly advise people not to reciprocate. If you don't reciprocate, this is near the top end of the tariff regime. Implication being, be good little boys, be good little girls, go away, take your medicine, sit in the corner and be quiet and all will be well. But, how can you take that as any kind of a guarantee?
Well, what challenges does this present for the Federal Reserve, who have to react to the announcements as they've come, and indeed for central bankers around the world?
So in terms of the Fed, look, I'll clear my throat with this by saying that, what was announced Wednesday is not necessarily where things settle. I think there's a big performative component to this. Whatever the tariff regime looks like, will it be higher than what it was last week? Sure. Will it be higher than what it was on January 19? Yes, absolutely. Doesn't mean it's as high as this. If these numbers stay and there's no scope for negotiation, no scope for deals, which I don't really believe. But if they do, then this is a very significant hit, not just in terms of easy to define metrics like GDP this, inflation that, markdown growth forecasts, X basis points. This is a drawing up of was going to say the drawing up of the drawbridge. I'm mixing my metaphors. I'm really reluctant to say this is a declaration of economic warfare on the rest of the world. That feels like it's going too far. But, there's some kind of break here. Is it retrievable? We'll see. How much is performative? We'll see. So having cleared my throat with all that, it is generally seen as closing the door to interest rate cuts by the Federal Reserve in the near term. I'm not sure I agree with that entirely. It depends what else is going on. The economy has been softening. The data for the last couple of weeks has not been great. Things aren't falling apart, but there's a softening. People have raised their projections for the likelihood of a recession. Let's not forget the Fed has a dual mandate. It also has to promote maximum sustainable employment. The labour market's already softened. If there is a material weakening from here in the labour market, they're not necessarily going to worry about whether PCE is at 2.7 or 2.6. Remember, it's an average of 2% over time.
Yeah. So that's the kind of maybe some of the thinking for the Federal Reserve. I mean, I'm glad you talked about the question, which is, I think, in the back of people's minds, is it economic warfare or not? I mean, on your point, though, about US exceptionalism, again, are people being too quick to write off US exceptionalism?
Well, if you go back to Steve Mirren's quote from late March, he's saying the US economy is exceptional, so therefore pay up if you want to come here. That's not how most people would define it. American exceptionalism has come to mean many things over the years, over the weeks, heck, over the centuries. There are still some things about the US that are unique. It is an engine, or has been certainly an engine for innovation. It has the world's reserve currency, bar none. That was the point I was making in a column that attracted your attention from last week. We'll see what happens here as a result of this. But dollar exceptionalism as manifested in terms of the US currency and its ability to give you things that other currencies don't have, and its resilience to shocks. It's going to take a bit more than this.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.